Aside from telling your friends and family that you're a stock market investor with the hopes of maybe someday making some Lambo money, most people get into investing with the goal of saving and planning for retirement while growing their net worth over time. By consistently saving and investing enough money in the stock market during your working years, the goal for many is to then build up to a portfolio that they can then live off of during their golden years. But what if you're interested in living off of your investments much sooner than that? Hey, what's going on, savers and investors? I hope you're all having a great day as always. If you're new to the channel, then welcome. My name is Griffin, and in today's video, we're going to be speaking about a topic that I am super passionate about and is even one of the main reasons why I started this channel in the first place, so that I can share with all of you my journey through investing, how I analyze stocks and other investments, with the goal of helping all of you reach financial freedom through your investments. Now, over the past couple of years, I've personally made it my #1 priority to create multiple different income streams while resisting a temptation to spend any of it, so that I can then save and invest as much of this income as possible to then build up eventually to an investment portfolio that throws off enough cash each and every month to cover at a minimum my basic living expenses. This shouldn't come as a surprise to you, but I've always tried to be as transparent as possible with you on this channel regarding my various ventures, whether it be investing in the stock market or real estate, my various sources of income, or the multiple business ventures that I've started, which for the record, there are far too many than I'd like to admit. Regardless though, the whole point of doing this really is just to share my point of view and experience with you and hopefully motivate even a handful to take action for a better financial future. While planning out this video, I sort of realized that the reoccurring theme or goal, I guess I could say, throughout my different investments, businesses, and ultimately just the income streams I've been trying to create over these past couple of years has always been to, at a minimum, have enough income on a so-called passive level, so to say, to cover at a bare minimum my basic living expenses, including housing, food, utilities, and my car. If this is accomplished, then any other income that you're generating from active work can then be saved, invested further, and put to better use. And by the way, when referring to passive income, it certainly was no mistake that I put up quotation marks, because on the internet, the word passive income has sort of become this word used for generating money for doing nothing or sleeping, so to say. And although this might be true in some particular situations, in my opinion, the true forms of passive income are either dividends or appreciation through stocks, or cash flow and appreciation in real estate. It so happens though that these two forms of what I consider passive income are what I'm personally working towards through investing and saving my active income, aka my job, and the income from this YouTube channel. But why am I saying this, and how does it relate to you? Because I promise this isn't a video about how I plan on sleeping all day in a couple of years. In fact, I've been wanting to make this video for quite some time in order to show you and give you some perspective on what is possible with your investments if you have a consistency over a long period of time. Because I don't know about you, but I am personally obsessed with the idea of growing my investments to a point where the money is working for me, and then I don't necessarily have to cover those basic living expenses with active income. And this is something that everyone watching should strive for. So as mentioned, there are two strategies to create passive income that I'm personally utilizing in order to create those two income streams, and they are dividend growth investing and cash flowing real estate. Now on this channel, I'm well aware of the fact that the area of interest of the audience really is with stock market investing, so we're going to be focusing on dividend growth investing for this video. But if you're interested in learning more and seeing content about my real estate investing strategy, then make sure to leave a comment down below letting me know that you're interested, and subscribe to the channel so that you don't miss out on any future videos. So if this is the first time that you hear about dividend growth investing, then not to worry, because it's extremely simple and easy to set up straight from your smartphone. Dividend growth investing is the practice of consistently buying shares of companies that have a proven track record of redistributing a portion of their earnings back to shareholders for doing nothing more than holding a position in their stock. Technically speaking, if you bought a share of Coca-Cola stock 50 years ago, which by the way is more than double my age, then that great investment decision way back then would still reap dividends to this day each and every quarter. I've spoken about dividend stocks tremendously on this channel because other than investing for appreciation of the assets, in this case the stocks, dividends are what provide your portfolio with steady and reoccurring income that can then be used to either reinvest, purchasing more shares, or use to live off of. If you're looking to build build a portfolio of dividend stocks to use that dividend income to live off of, or at least use it as a supplementary source of income, then it's therefore really important that you carefully select which dividend stocks you're going to be using and putting in your portfolio, because always remember that a company is in no way obligated to maintain that dividend or raise them over time. This happens to be one of the main reasons why on this channel I've spoken quite a bit about companies and funds categorized as dividend aristocrats, because these are companies that have a proven track record of consistently paying out and raising their dividend over time for a minimum of 5 years in Canada and 25 years in the United States. I know what you're thinking, 5 years in Canada, what gives? This isn't all that long and doesn't necessarily bring you all that much confidence as an investor in a long-term dividend play. And I would tend to agree with you on this point. However, in Canada, the reason for this is because on the Toronto Stock Exchange, there aren't that many companies that have maintained a 25-year dividend growth streak. And for this reason, in order to just have a larger pool of dividend aristocrats, the Standard & Poor's agency, which ultimately makes these decisions and criteria related to things such as dividend aristocrats, has made it in Canada only 5 years so that there is a larger selection base. And if you're interested in learning more about each dividend aristocrat, I've made a full comprehensive blog post on my blog going over every single Canadian dividend aristocrat. I've got your back, don't worry. So the question now is, which stocks or funds are good investments for long-term dividend income? And notice that I also said funds, not only stocks, because you can in fact decide to invest your money into an exchange traded fund, or ETF for short, that is focused on dividend income rather than having to always hand select each individual company. For example, the iShares Core S&P Composite High Dividend Index ETF, ticker XEI, is a Canadian ETF offered by BlackRock, which focuses on long-term capital growth and high dividend income. In fact, the trailing 12-month dividend yield of this fund was 6.12% net of the 0.22% management expense ratio, which is extremely high due to the fact that it's highly weighted in the financial sector. The advantage with an ETF is that, let's say one company of the 66 in this particular fund were to eliminate their dividend, well, you wouldn't be in as much trouble than if you only had, let's say, 3 or 4 dividend stocks and one of them decided to eliminate the dividend, which is a quarter of your investments. By choosing a dividend ETF, this is even more passive than hand selecting the stocks, and you can just sit back and collect your dividend checks. But what if you're someone who's more interested in hand selecting each individual dividend stock that you'll be investing in? Well, that's totally fine, and I understand because I do this myself. However, note that there are pros and cons to this method as well. First of all, you're going to have to do much more research into each individual dividend stock that you're investing in so that you have a really good idea of management, the financials, and overall just the direction of the company so that you know what the heck you're investing in. The second important point to note is that you're going to be more heavily weighted in each individual position unless you were to go and buy, for example, 60 different dividend stocks, which I absolutely would not recommend. You're going to want to select a handful of dividend stocks that you think have great potential and that give you a good dividend yield, but for this reason, you're ultimately going to be less diversified across your investments. Some of my favorite Canadian dividend stocks include TD Bank, Royal Bank of Canada, Granite REIT, Fortis Incorporated, and Canadian Tire, just to name a few. Now, obviously, there are way too many dividend stocks to cover in this video, and it so happens that this is one of the main topics of the videos on my channel, so I highly recommend that you watch some of the more popular videos on dividend stocks that I'm overlaying right here, and that you can find links to down in the description. Now, at this point, you're probably doing some quick math in your head, trying to determine, well, how much money would I need in order to cover my expenses? And the answer to that really depends on your lifestyle choices. The more expensive your lifestyle, the more money invested you will need in order to generate enough income to cover your living expenses. If you're as frugal as I am, then a couple $100s a month should do the trick. However, if you're someone who goes out to restaurants 3-4 times a week, or well, at least not in 2020, but let's say 2021, you go out 3-4 times a week to restaurants, and this is just part of your lifestyle, then there's really no other way around it than you're going to need to have more money invested in order to create enough income to cover your expenses and become financially self-sufficient. But you know what? That's totally fine, because you don't need to have your investments cover the entirety of your expenses as I'm trying to do. This is just a really specific goal that I personally set my sights on. But the reality is, if you're able to generate an extra $50, $100, $150 per month in a passive form from your investments, then this is awesome because it's passive income that you're doing absolutely nothing to generate, and it is growing over time like clockwork, which is one of the main reasons why I highly recommend everyone starts investing as soon as possible to grow their investment portfolio over time. Back to the dividend income scenario, we're going to be using my own situation as an example on which you can base yourself off of if you like. In terms of housing, food, Wi-Fi, my cell phone, smashing the like button, my car, and other little expenses here and there, my fixed living expenses on a monthly basis typically hover right around $900 per month. And I know that this sounds really low, but know that this is 100% attributable to my lifestyle choices. My car is fully paid off and costs about $25 to fill up the entire tank, and I rarely buy clothes. In fact, I usually wear the same clothes for the better part of a year or two. As you can tell from my videos, I typically rotate the same like 4 or 5 shirts. I also rarely go out to restaurants and just make it an occasion when I do, because to me, inviting my friends over and having a meal at home is just as entertaining as going out to the restaurant for a fraction of the cost. And in terms of my housing situation, in the coming month or so, I'm moving into one of the units of my rental properties, which is going to slash down my living expenses quite dramatically. At the end of the day, the way I personally see it is that it's a balance between over leveraging your funds into stuff that you just don't need, or having a cheaper lifestyle and then having money saved up so that when the good opportunity arises for a great investment, you can then deploy those funds into the investment, leading to faster self-sufficiency on a financial level. I've mentioned this even multiple times on the channel, but I still have a day job full time, and then on weekends and evenings I hustle on my YouTube channel and my investments for an extra like 40-50 hours per week. But the thing is, anyone can do this, especially if you're watching this video right now, because it means that you're already somewhat motivated to get your financial life on track and then reach financial self-sufficiency. So with that $900 per month living expense figure, that represents $10,800 per year, and at a 4% dividend yield, it's not too complicated. You would need $270,000 invested to generate enough dividends to live fully off of that dividend income. And let's say you had $2,000 as living expenses on a monthly basis, then you would need $600,000 invested, which is significantly more. Now I know what you're thinking, $300,000 invested in the market, who has that type of money? I certainly don't, and not even close. However, you need to realize that is a process that builds over time through your active income that you then reinvest back into your portfolio. For example, with myself, my job and this YouTube channel is money from an active source that I'm then reinvesting back into my investments, being dividend growth investing through a dividend portfolio and cash flowing real estate. Again, I'll speak about cash flowing real estate and my plans for that. If you're interested, make sure to leave a comment down below that you're interested in that type of content, and smash a like button if you're enjoying this video up to right now. But the thing is, it doesn't just end with the dividends, because even though the dividend income is the money that your portfolio is generating from your investments, remember at the beginning of the video I said that people invest in dividend stocks for two things, being the dividend income, but then also the appreciation of the assets, which in this case will lead to compounding interest. These two factors combined of having dividend income as well as appreciation of the stocks, which by the way, if you reinvest your dividends back into purchasing more stock, which we'll speak about shortly, this will be materialized even quicker. So this means that you can reach that $270,000 level much quicker than if you were to only save up to the $270,000 in your portfolio, which of course would take like 2 lifetimes and isn't really worth it. Let's take a look at 2 different scenarios in order to give you an example of what's possible through dividend and growth investing. So if you started with $0, as we all do, and were able to save $1,000 per month, well, it would take you 270 months to get to that $270,000 figure, and that doesn't take into account the fact that inflation would severely impact the buying power if you were just saving your money. Now on the flip side, if you started once again with $0 but invested $1,000 each month into dividend growth stocks that have a proven track record of increasing their dividend payout over time, and then you reinvested the dividends for the time being while building your portfolio, it would take around 12 years at an average growth rate of 7% on the investments to reach that $270,000 goal. Now keep in mind that this is incredibly achievable for anyone looking to save and build towards retirement, with timeframes often even much longer than this in the 30-year invested range, which would put the portfolio at $1.85 million. And if you're someone who is really motivated and has tons tunnel vision to save and invest as much as possible at say $2,000 per month invested, it would only take 8 years to reach once again that $270,000 goal. Now obviously there are other factors to keep in mind like taxation and inflation, which could be a whole other video in itself, but this really just showcases the potential and feasibility of what's possible in regards to living from your investments. Now I know the title of the video was living off of dividend income and investments. However, I do want to make this really clear that in no way am I saying that I'm looking to live off of $10,000 a month and then just calling it a quit and only living off of that passive income. This is just a goal that I've set for myself so that if anything ever happens to one of my income sources, then I don't have to stress out and it dips significantly into my long-term savings. I'm not suggesting here that I'm trying to live exclusively off of my dividend income and the cash flow from my real estate properties. Rather, I want to use this as a supplemental income source to have sort of a safety net, and this is what I would recommend you set yourself as a goal as well. Instead of trying to live exclusively off of dividend income, that would be extremely difficult to accomplish. The fact of the matter is, any source of additional income that you're creating in the form of either active or passive, with passive being a bit more favorable here, is still something that you should definitely be striving for in order to help yourself out from a financial standpoint. Start off by focusing on learning more about the different investment classes that interest you as an investor, whether it be on this channel or on another channel or with other resources, and then take action towards those investments, because everything is achievable with enough determination and consistency. I really hope you enjoyed today's video and that it helped you better understand why you need to be focusing on making your investment a secondary source of income for yourself. If you're interested in learning more about stock market investing and personal finance in general, then make sure to subscribe to the channel for more videos and hit the bell button so that you're notified whenever I release new content. On that note, if you enjoyed today's video, then make sure to smash the like button for the YouTube algorithm. It really helps me out, and check out one of the 2 videos that I'm overlaying on the screen right now. So on that note, have a great evening and I'll see you in the next video.